Hey everybody, how's it going? It's Russell Matthews here. Now, we Canadians tend to have the reputation of being some of the most polite people in the world, and while that might be a positive in some ways, it certainly is a negative in others. You see, in many circles across Canada, many different friend groups, many different families, it's become extremely taboo to talk about money, and I really believe this is setting us back years and years when it comes to building our future wealth. Because what does money really mean? You may have heard the saying, money is the root of all evil, but in my eyes, money is really the thing that allows you to enjoy the best parts of life, your family, your friends, and your health. And by talking more openly about money, we can all collectively learn more and make up for the huge lack of financial education in the Canadian school system. That's why in today's video, we're going to go into a personal investment of mine and actually go into the account and take a look at it. And we're going to talk about the strategy a little bit more, why it works for me and why it might also work for you. And hopefully with videos like these, we'll all be able to learn more and more and improve our own personal financial pictures so that we can enjoy those things that are the best parts of life. So let's get right into it. But before we do, if you haven't already done so, make sure to hit the subscribe button and the notification bell to tell YouTube, hey, I'm seeing this Canadian content and I want to see more of it here on the platform. So here we are inside of my actual account, and the type of investment that we're going to talk about today is a dividend investment. And the reason a dividend investment is special is because this is a special type of stock that will actually pay you money just for holding it. You can see some of the payments that have hit my account for holding these stocks here. You see at the bottom BMO dividend, $12.72, and working up, these are all payments that I've received recently from holding these dividend stocks. Now let me explain exactly what a dividend stock is if you don't already know. Usually when you buy a stock, the value of it goes up and down based on the performance of the company. And the same goes for these dividend stocks, but they also offer an additional interest rate based on the amount of money that you have put into the stock. Usually this is something offered by bigger companies because they're making so much money and they're not really incentivized to grow at a fast rate. They're actually able to take some of their profits and hand it out to their shareholders in order to keep them happy. The reason that smaller companies typically don't want to offer a dividend is because instead of using their profits to pay out shareholders, they're going to take the money they're making and try to grow the company more. That's called a growth stock, something we'll talk about another time. The beautiful thing about a dividend stock is that it pays you money on a regular basis. Now this is huge for a lot of people because they can effectively set their goals so that they can keep on investing more and more money until the amount that they've invested will actually cover their living expenses just from these dividend payouts. By investing enough over time, you could effectively retire and just live simply off of these dividend payments. That's what makes this so special and so interesting for so many people who are interested in this sort of investment strategy. Let's take a closer look here. Here's a stock that's inside my portfolio and it's BCE. Now this is the Bell stock. If you live in Canada, you'll definitely know Bell as one of the larger telecommunications company that exists. If we take a closer look here at the 1-year chart for Bell, you'll see that it doesn't really have much growth. So people aren't investing in Bell for a huge amount of growth in the price of the stock. Rather, they're more investing in it for the dividend in many cases. Now, when we scroll down here inside of the app, we can see more information about the stock. There are a bunch of numbers here, and we may go over these in future videos, but for now, I want you to focus on that bottom right-hand corner number, the one that's titled yield. Now, this shows you how much of a dividend this individual stock pays out. In this case, for Bell, that dividend yield is 5.99%, and we can use this number to calculate how much this company is going to pay us each year just for holding their stock. And it's actually pretty simple to calculate how much you're going to be paid. Now, all you need is the dividend yield, that percentage we just had, and however much you have invested in that company. To keep things simple, for an example, let's say you had a $100 stock of a company and they were giving you a 4% dividend yield. Then over the course of the entire year, you should expect to get paid $4 from that $100 holding, right? Because $4 is 4% of 100. And most dividend stocks are paid out on a quarterly basis or every 3 months. So in this example, if you had $100 invested, you make $4 over the course of the year, or 4 separate payments of $1 every 3 months. Of course, $4 a year isn't a whole heck of a lot, but as you save more and more, this number starts to increase. And especially if you take the dividends that you're paid and use that to invest in more dividend paying stocks, then that snowball can really get going. growing. So going back to this Bell stock, we can calculate how much I should be paid each year for holding it. First, we take a look at the total value here. Let's say that's close enough to $2,000. We'll just call it $2,000 even, and you'll remember that the dividend yield is 5.99%. So we take the total value of the stock that I own in that company and multiply it by the dividend yield that I should expect to be paid. Remember, that was 5.99%, and we get to roughly $120 that I should expect Bell to pay me just for holding their stock. So every 3 months, I should see $30 hit my account via a Bell dividend payment. Now you'll see here on this dividend payment, it was only $15, but that's because at the time that this dividend was paid out, I only had $1,000 invested in Bell, so of course it's half. And this is just one of a number of different investment strategies that you can choose to use, and it's worked out for quite a long while. This strategy was introduced to me by my grandfather, who I call my papa. He was a huge believer in these dividend investments, and he said, hey Russell, when I was 18, he said, it's time to start investing, and he said, put some money into these blue chip Canadian stocks, so these big companies that are very unlikely to fail. Now since then, I've diversified the investment strategies that I choose to use, but I still do have these dividend stocks. I've diversified into some more growth stocks, I've invested in real estate, and a little bit of cryptocurrency. But let's take a closer look at the other dividend stocks that I'm holding inside of my account so we can get a better picture of my entire dividend portfolio. You've already seen Bell, so we won't touch on that, but let's look at BMO. This is Bank of Montreal. So I have a holdings of $1,200 in here, and the dividend yield is a little lower at 3.9%. Then we have Bank of Nova Scotia, or Scotiabank, and my holdings in this are $1,300, and the dividend yield is around 4.6%. Continuing with the trend of big Canadian banks to invest in, this is CIBC. The holding here is $1,200, around the same value as the other one, and that is a dividend yield of 4.82. And I'm also holding TD Bank, about $1,300 of this, and it's paid out at a 4% dividend yield. And finally, we'll take a look at Rogers, and this is around $1,000 at a dividend yield of 3.54%. So if you put all these together, it adds up to roughly $8,000 invested, and I should be expecting to see around $340 each year paid out for holding that investment. That's roughly $85 every 3 months from holding these investments. Now that's not a ton of money, and it's definitely not going to cover all of my living expenses, but the idea is that over time, as I get older, I'll invest more and more money, and with this, along with other investments that I have, I'll be able to eventually pay for my living expenses just from my investments, and that's when it would be safe for me to retire. If this all sounds like something that's interesting to you and you haven't invested before, I'd recommend opening up an account with Wealthsimple. There's a link down in the description where if you sign up, you can get $10 and I can get $10, but it's a great place to start if you're specifically investing in Canadian companies. With Wealthsimple, it's free to start up an account and there's no commission fees charged to you when you buy a Canadian stock or ETF. So if you're planning on following this strategy of going with Canadian dividend investments, then Wealthsimple could be a good option because you wouldn't have to pay any fees. Now, if you're planning on investing in American companies, I might not recommend Wealthsimple because they do charge you a currency transaction fee to invest in US stocks. And when you're opening your account with Wealthsimple, if you don't already have one, you should set up a TFSA account. Now, we've talked about this before and I'll link to the video in the description, but this is the best account to invest in because you don't have to be taxed on whatever gains you make over time. In normal non-TFSA accounts, the government is going to say, hey, we'd like our piece of that pie that you've made over all this time that you've been investing. So hopefully you've found some sort of value in this, or maybe you've learned something by taking a look at my personal account and my personal investments, so we can sort of talk more openly about investing in our money so that we can all sort of collectively push towards this better financial future, because the number one stress for most Canadians is their money, and if we can sort of work towards eliminating that, then I think we'll all be better off. And if you found this information valuable, there's a good chance either a family member or a friend could find it valuable too, and it would be a huge help to grow this channel if you would share this video with them, so I'd really appreciate it if you'd do that. And of course, if you haven't already done so, make sure to hit the subscribe button and the notification bell to keep on seeing Canadian content right here on YouTube, and let's face it, there's not quite enough of that these days. Well, I hope this video has helped you out. Thank you so much for watching, and I'll see you next time. This channel is supported by viewers like you. Thanks, channel members.